I guess I'm just going to take the screens. Oh, okay. You were doing it. Okay. All right. Okay. I see it. Well, it keeps coming on and off from my end.
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, 21st day of March, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. Michael's going to come on first today, give us a recap of what happened in the live training room, do a little live trading on the TradingView platform. Then I'll come back and we will begin at the top of our schedule as we did just the other day. So Michael, if you're ready, take it away.
I am ready. Here we go. There it is. All right, you should be looking at my screen.
Good. Yep.
Excellent. All right. Good afternoon, everyone. And it is just barely afternoon. Today is Friday, the 21st day of March, 2025. Now, if you have not taken a free trial with us and you'd like to, go here to mytradingiq.com. Click on the purple button right here. There's no credit card required for the trial. Click on that purple button. It's going to bring you to this registration page where all that we ask for is your name, your email, and your phone number. Down at the bottom, I guess I didn't do that last night. Down at the bottom gives you TradingView login ID. Okay, if you're going to take the trial, we really need you to get that TradingView login ID. Hit the register button. Once you do that, we'll know that you did that, and we'll be able to set you up and get your indicators indicating. All right. Now, you really want to get that done before you start the trial. All right, so you'll have all your stuff running in front of you while it's running in front of us in the room. All right, so the spreadsheet, if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. We had an interesting day today. It's quadruple witching Friday, I guess, which means that a whole bunch of things expired today, like options and futures and stuff like that expired today, all at the same time. And it made for an interesting morning on some of the markets. Gold was great today, but the other markets were back and forth quite a bit. The way it worked out for us, so we got 50 ticks on the NQ, 35 ticks on the Russell, 114 ticks on gold, and 10 ticks on the ES. Now, the only one of those that is at the high of the day, I guess the Russell and the ES, this one at 35 is the high of the day for us, and this one at 10 is the high of the day for us. The gold, the high of the day was 124, and we stopped out on our last trade there. And the NQ, the high of the day was 94. 94, and we stopped out once on that, and then we worked our way back up to 50 from 34. But we'll get into all that in a minute. Today it took 3 minutes in one trade to get to $1,000 a contract. No, I'm sorry, it's not $1,000 a contract, $1,000. 3 minutes in one trade to get to $1,000. That was with 10 contracts on, which total of 63 trades this morning. 63 trades. 63. I think that's the most we've done this year in a given month, a given day. Yeah, we're into last year there. I think 63 is more than we've done on any day so far this year. Yep, it is. We had 160 trade day earlier this month, but 63, that's a ton. And we missed a whole bunch. On the month, we're up $19,487 over 10 business days, averaging $1,948 per contract per morning session. Okay, so with 10 contracts on, it's 10 times that. On the year, we're now at $76,970 over 47 business days, averaging $1,637 per contract per morning session. That's for the whole year we're averaging that. All right, we've now gone 47 out of 47 days this year, getting our goal, and 456 days since our last red day. So if you were to quit trading when you get your goal for the day and add 1 contract per month, so far this year, you would have only had to work 7.21 hours on the whole year and be up $13,890. Be trading your 3rd contract right now, and $13,890. You'd be averaging $1,924 an hour on the year. All right, let's get into it. In the gold today, we made a killing in gold today. For a while there, we were averaging 9 ticks per trade, but then we stopped out a couple of times. Our very first trade on gold was right here. We only had 1 tick on that. Then we had 10 ticks on the next to get us to 11. Then we didn't do anything in here for a little while. There were some nice trades in there. There was one nice trade right there, another nice trade there, another nice trade there, a trade here that was good enough. It went 9 ticks into profit before it came back down. Nice trade there. There were like 5 or 6 really good trades in there that I missed. Then finally I got this one here for a break even. Now at this point we were at plus 11. We took this right here, got 7 to get us to plus 18. Then we had 10 to get us to plus 28. Then we had the stop out. Okay, we had a plus 10 and a minus 10 right here. I think I did those backwards. We had a plus 10 and a minus 10. But there was another one where we went up to 44 in there. Then we went plus 10, minus 10. We ended up back at 44 after all that. Then we had a break even. Then we went to 55. Then I think it was right here. We went from 55 to 85, then 85 to 99, then 99 to 108. Then we had a break even. And then we stopped out. We went down to 98. Then we went back up to 100 even. Then it starts going the other direction. We had a break even. Then went to 104. Then 119. Then 124. Then a break even. And then we stopped out and put us down to 114. So there were a ton of trades in there on gold today. We got most of them, but there were a bunch that we missed. There. All of those winning trades. There. Just a ton of winning trades that we did miss. But we got a whole bunch of good ones. During the break, you can see that there was a trade right here. That would have been a stop out. There was a trade here that would have gotten it right back. A trade here. That looks like it went to break even. A trade here. That would have stopped you out. A trade there that would have been break even. A trade here that would have gotten it back. A trade here. That would have been you buy the open of that bar. You would have stayed in it. Would have worked out. This would have been okay. And you got right now. That's what we had on gold today. All right. So gold was really active trading this morning. Unusually active trading this morning. The Russell now. The Russell, we were negative on the Russell for quite a while this morning. We ended up positive toward the end. But this is the whole day. We started out here with minus 25 on the Russell. Then we got 10 ticks to get us to minus 15. Then a break even. Then 10 more ticks to get us to minus 5. And then we stopped out again, put us at minus 30. Then we had a plus 15 to get us to minus 15. Then we had a plus 10 to get us to minus 5. Then a plus 15 to get us to plus 10. Then a plus 10 to get us to plus 20. And then a plus 15 to get us to plus 35. And that's where we ended it on the Russell, plus 35. So I don't think we missed too much in there either. We got stop outs and everything that happened. There were a couple of nice trades in there. That one, and that one during the break. All the trades during the break looked like they worked out okay. This one right here might have been the only questionable one because you would have sold at the open of that bar. So that would have worked out fine too. During the break, there were about 6 trades that looked like they were good. The ES, now we were back and forth on the ES all morning too. We did get our goal on the very first trade, but I kind of screwed that up this morning because I wasn't on the ES, I was on the YM, and I didn't realize it at the time. But so we actually, we probably didn't get the goal on the ES right away. It probably took a little longer because I got 8 ticks on the very first trade. And where was that? I'm going all the way back here. All right, well, It was in here somewhere. We had 8 ticks on the ES, and then we stopped out on the ES. Why don't I have those 2 trades in there? We got a break even. It was early on. And we had 8 ticks on the ES, and then we stopped out on the ES, and then we had a break even, and then we had this was after the stop out. Then we had a +2 to get us. The stop out put us at -2. Then that, because we were a +8, and that put us at -2. Then we went to break even right there, and then we went from break even to +2, and then somewhere in here we went to +6, and then we stopped out and we went to -4, and then we went from -4 to, there's some trades that are missing in here. This is the way it went. We went to 8 to -2 to +6. I'm sorry, to 0, then to 2, then to 6, then to -4, then to, that's not 8, that is a 0, then to 0, then to 12, then we stopped out and went down to 2. I'm sorry, then we went to, we stopped out and went down to 2, then we stopped out again and went to -8, and then we went back up to 0, and then we went to 2, and then we went to 10. That's how it ended up. So these 2 stop outs in a row here. After that, we were at -8. Yeah, because we had gotten up to 12, it looks like. And then we went down to 2, and then we went to -8. And then we went to back to 0, then back to then to 2, and then to 10. And then we stopped out right here. There's more that happened after that. Okay, those are the 2 stop outs in a row. I don't know. At the end, we had, that was a +8. This was a +2. And this was a +8, I think. That's what we ended up with at the very end. During the break, we had, yeah, I guess I wasn't marking them all on the chart. I was writing them all down in my log, but I wasn't marking them all on the chart because we did have 60-something trades today. Either way, we, during the break, had one right here, long trade that worked out, a short trade right here. Now it shows 4 on that, but it was actually the next bar right there. That's what we would have gone long. That would have been okay. It would have pulled back pretty deep, but that would have been a good trade right there. Decent trade right there. Enough to get break even on that one. This one would have stopped you out. This one right here would have gotten a break even. This one right here would have been a break even. This one right here would have stopped you out. And that was it. That was it between all those trades. Whew. A lot of trades, I'm telling you, a lot of trades. In the NQ, we had 15 trades or so. So let's go back to the beginning on the NQ. You can see I made some mistakes in there. All right, I guess that was my first trade on the NQ was a mistake. We were -60 on that one. All right, I should have had my stop at break even. That's why I got an orange. We were -60 on that. Then we got a little bit there, went to -47, break even, then a little bit more, went to -33. Then a little bit more, went to -29, then a little bit more, went to -5, break even, then we finally got positive. We went to +70, so we had a 75 tick trade right there. That was our, so we got positive on the NQ. We stayed positive after that. We were at +70 after that. Then we had a break even, then a +20 got us to 90, a +4 got us to 94. Then we went from 94, stopped out right here, back down to 34. Then went to 36, and from 36 to 50. That's where we ended it. So if you look at all these numbers in here, you see all those 50s and all those big numbers in there. So it was having pretty good follow through today from the signals. Obviously, you can see there was a short here that worked out just fine. There was a long right here that didn't show anything up here because they're actually different signals. But that long right there would have stopped you out. You had a long right here. That would have been okay. You had a short right here that went 16 ticks. You had, so 16 ticks, I'm sorry. That would have stopped you out. 16 isn't enough to get the stop to break even, so that would have stopped you out. A long right here, that would have gotten it back. A short right here, again, that would have stopped you out. This long right here that went 15, it did end up going up after that, so that would have been okay. Then the short right here, that would have stopped you out because it only went 16. You move your stop after 20. If 49 takes on that one, that would have been okay. And that was it. So the NQ was pretty active. Early on, it wasn't that active, at least not for me. I stopped out at minus 60, and then it took me a little while to get to positive numbers. It took me 1, 2, 3, 4, 5 trades to get from minus 60 to back above 60. Whew. That took a long time to go over all those trades. So we have about 14 minutes left in here to put some trades on, and hopefully we'll get some opportunities to put some trades on with you guys. Right here on the yes is a shorting opportunity. All right, now I missed the optimum entry. The optimum entry would have been right here at the open, which was right there at 86.50. And I am in almost a full point off of that. I'm going to bump my stop to break even because it did just hit plus 4 ticks. But here's the yes, and it just took me out at break even. Right, the black and the blue went together over here on the Russell, so that's not a trade. But look at the way the Russell has come together. And this is what I was trying to show you guys yesterday and this morning. The way this has come together right here. Now, the black and the blue went together, so you don't have a trade here, but it should pull back down to here. Okay, right down to this area. So if it does, and you get an opportunity, see, this area is what I was talking about right here. So if it does a little bit of sideways action right here, and let's say it closes down here and closes up on the next bar, and then maybe the next bar after that, and then it pulls back down to here, and you get an opportunity to go long off of this level right here, that would be a great opportunity to go long because it has a big leg length right here that it's trying to copy. Okay, and it could do exactly what I just said, because after a big leg length like that, a lot of times it might have a consolidation period like this little junk right here before it makes the next move. All right, and that's enough to get it back up into the overbought and back into the oversold, give you another opportunity to enter. Okay, so we'll keep our eye on that one and see what happens with that. Over here on the NQ, we want that to pull back also. That's had a nice big run up. The ES, I'll pull back down to here would be good. And the gold is kind of mixed up. The gold's in a little bit of chop. If we look at that, spread out and look at that. This is the high, this is the low of the chop. You see you have a double bottom and a double top going on. Excuse me. Double bottom and a double top going on. What we want to see is an up close on this bar that'll put us right up here at the top and put us in the overbought. But it probably won't be alone in the overbought. That's the problem. Okay, it probably won't be alone. All right. So let me slide this all the way over here. Here and here. And that's it. So now we just have to wait a minute. All right, we're in the overbought here. So the open of this bar right here, it's making the run up. This is what the leg that I was hoping we were going to get from down here, it's actually doing right now. So what we can hope for now is that it does do a nice leg up, and it gives us an opportunity for a 50% retracement of that leg up. It didn't pull back as deep as I wanted it to right there. The gold is in some nice chop, but right now, this is what the chop is doing, right? I don't know if you guys have read that thing that I did about 3 different kinds of chop. If any of you ever read that thing, I think I made an article about 3 different kinds of chop, or a video or something like that about it. This is triangle chop right now. And triangle chop's like the second best kind because it's got a top and a bottom, though it's diminishing. And so right now you can see how tight it's getting in here. If this closes up above that, then it's going to extend the triangle chop a little bit until it starts to make a real move up and gets up above the prior swing high. Channel chop, like this stuff right here, that's the best on the ES. That's the best kind of chop because you have a top and a bottom in it. Okay, and the worst kind of chop is a bugle chop. See this right here, you have a top right there, and you have a bottom right here. That's the best kind of chop. And the worst kind of chop, excuse me. The worst kind of chop is, we don't really have any right now. Well, it would be if we had a lower low right here. You had a higher high and a lower low. That's the worst kind of chop. Okay, well, you see this broke out of the top of the channel right there. So now we look for a pullback to about right here. And hopefully get a long trade off a pullback right there. Okay, so this over here turned into this right there. And this turned into this. So we don't have a trade here, we don't have a trade here, we don't have a trade here. And we don't have a trade over here. All right, so we need this to get up into the overbought right now. And if it does get into the overbought, we'll have an opportunity to sell it. So that's the best way for a trade to come together, but the markets have been like that today. And an ideal trade would have been a pullback right about from here down to here, would have been an ideal trade. In here, if you were doing the trend trades, you wouldn't have the slingshot on here. And above here, you'd just be taking the trades that go into and out of the oversold. So on that leg up, you'd have had one trade. On this leg right here, you'd have had one trade. On this leg right here, you'd have had one trade. On this leg, you'd had 1, 2, 3, 4, 5, 6 trades through here. Through here, you'd have had 1, 2, 3, 4, 5, maybe 5, depending on which one you were doing. All right, so the ES is getting back up to the top of that now, and it's giving a shorting opportunity from right up there at the top. It's a little bit risky, but it's a valid trade. What should it do? Well, you've pretty much gotten up to the top here. It went into the overbought, so it'd be from right here is where you should short. I would say short from up here at the very top. If you're going to short it, short from up there at the very top, and it should make a retracement down to about here to 95, right there. And it should make a retracement from there down to about 95 is what I would think. If it's going to do it at all, that's how I would think it would do it. Here. And my money where my mouth is. Should go back down to here. If it's going to do it at all, it should go down to here. Okay. It is counter trend. So if you're doing with the trend trades right here, you wouldn't be in this at all if you're going with the trend. The gold right over here, a nice long trade that I didn't get. All right, so this went further up than I wanted it to go. It's probably going to stop me out. It did just stop me out. I went further up than I wanted to go. I had a little momentum to it on the upside. You could see it over here on the NQ too. The NQ had a little bit of movement right here. So what I was looking at earlier today, I was looking at 100% retracement of the whole day. It was going to be at 5,700, I think, is what I was looking at earlier when it was down here somewhere, I think. No, it wasn't even there. It was way back here. Way back here. I was looking at 5,700. Because if you crunch this all the way up, this right up here is where we started the day. And it did this huge move down all the way down to here. And then what it was looking like, it did this retracement right here, which was about a 50% retracement. It found resistance there. And it sold off that resistance several times, and it went through it up to here. And that's when I was saying, okay, well, now it looks like it's probably going to try to do 100% retracement, which would put you up here at 57.05. But pulled all the way back down here into this area right here. Now, when Dwayne looks at this stuff on the bigger picture, I'm sure there's going to be something on the 30-minute of the MA1 crossing the BBC. Probably that is what's going to be there. And there's probably weekly trading zones in here supporting everything too. But it looks like it's trying to get all the way up here to where it started the day, up here to 57.05, right in this area. That's what it looks like to me. And it's got a long trade right here. Let me minimize this again. Okay. The long trade was from the bottom of this bar right here. Okay, it already went 7 ticks in a profit. Let me do this. It already went 7 ticks in a profit. So if you didn't get it, it's too late to get it. Too late to try to get it. All right, over here on the gold's got a long trade from right here. I just jumped on right here, 20.1. The S is now showing a short right here. It's too late to get into it. Already went 7 ticks in a profit. All right. Gold needs 4 ticks in profit to pump that stop to break even. All right, so we're still waiting on this gold to see what it's going to do. It should give a leg up, something like this. It's center retracement of this leg, 100% retracement of that leg, but a 50% retracement of the whole leg. It found support here before, and it should be finding support here again and pushing up at least to 21.7, at least up here. Okay, stop's going to go to break even. It should at least get up here to 21.7 right now. Just going to look at a tick on that. That's 6 ticks. That's $600 for me right there. So I'll be okay taking that right now. I do think it's going to go further. I think it's going to go all the way up here and then some. But whether it does it with me or without me, I don't know yet. The NQ is in a weird spot. It should be going up right now and it's giving you a shorting opportunity. It's too late to get into now because it's already gone quite a bit into profit. Right, and we are out with 6 over there on the gold. The NQ would have sold the open of this bar right here. Okay. And the ES would have sold the open of that bar. It's gone 6 ticks into profit minimum. Yeah. All right, so the gold needs to put in a higher swing. The ES is a little bit choppy here, put in a double top. It's come back down off the double top. The NQ also put in a double top. It just gave 44 ticks on that trade so far. And wow, it's time for me to wrap it up already. All right, well, the ES has got a long trade right here. The gold had that long trade there that we just took some profit on. The NQ actually had this short trade here that it gave 44 ticks on. And the Russell's got nothing. So I guess with that, I will pass it back. Wait, before I do that, I'm just going to pass it right back out to Dwayne. That's not fair. Let me do this first. Today, we're up $1,690 in the room this morning. 50 ticks on the NQ, 35 ticks on the Russell, 114 ticks on gold, and 10 ticks on the ES. $16.90 per contract. On a month, we're now at 19,487, averaging 1,948 bucks. On the year, we're at 76,970, averaging 1,637 per day per morning session. Found the 24/20 blueprint. If you quit trading when you got the goal for the day and you added 1 contract per month, you'd be trading 3 contracts right now, and you'd be at 7.21 hours total on the year and $13,890 in profit. Okay, if you haven't taken a free trial with us, go here to mytradingiq.com. Click on the purple button. There's no credit card required for the trial. Just click on that purple button. It's going to bring you to this registration page. On this page, just fill out the form. Down at the bottom, gives you TradingView login ID. Okay. If you don't have TradingView, you need to get TradingView. If you're going to bother taking the trial, you want to have TradingView. Okay. All right. That is it, guys. With that, we can pass it back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park. Dwayne, you are ready.
Yep, I am.
Excellent.
Okay, recap of the morning session.
Today, it took 3 minutes and 1 trade to get to $1,000 per contract.
Good job.
Thank you.
All right, guys. Enjoy your weekend. We will now revert back to our regularly scheduled programming, which means we'll jump into our daily devotional. The topic we're on is doing things that matter. Today's scripture, Matthew 22, verses 34 through 40. When the Pharisees heard how he had bested the Sadducees, they gathered their forces for an assault. One of their religion scholars spoke for them, posing a question they hoped would show him up. Teacher, which command in God's law is the most important? Jesus said, love the Lord your God with all your passion and prayer and intelligence. This is the most important, the first on any list. But there is a second to set alongside it. Love others as well as you love yourself. These 2 commands are pegs. Everything in God's law and the prophets hangs from them. Again, Matthew 22, verses 34 through 40 from the Message translation. So today, as part of this ongoing series, Doing Things That Matter, we're going to talk about learning to love recklessly, part 1. I'm not sure that we treat the great command like it's the greatest commandment. I have the conviction that if love isn't easy, we don't give it. Often we only offer our love when it doesn't require much effort. We love our families, our hobbies, and we love donuts. We love the things that are easy. But this world needs people who love in face of disagreement, rejection, and even hatred. I wonder what would happen if we had an out-of-control type of love. One without conditions, fears, barriers, qualifiers, or protectors. What if we loved when it wasn't easy or convenient? What if we loved God and others recklessly? We've all had moments where we could have extended and given our love away, but instead we chose to do nothing. Doing nothing is the silent killer of the gospel. It's sort of like boiling our faith down to reducing sin. We can easily think that not doing certain things make us good and holy, but it's the opposite. It's doing something that makes us faithful followers of Jesus. Love sits at the center of a life engaged in doing things that matter. In the parable known as the Good Samaritan, Jesus paints a picture of what it means to love recklessly. The Samaritan didn't only see the need, but he chose to do something about it. The story compares the Samaritan's actions to a priest and a Levite who both chose to do nothing. It's interesting that these two people were the quote-unquote religious people of the day who claimed to love God, yet they avoided the messy, hard situation. How many of us do this in life? We love when it's easy. We're good people, but seem to go neutral when reckless love is required. The danger for most of us is not that we'll become bad people who don't care about things that matter. No, the danger is that we'll become good people who don't do anything that matters. Within you lies a person who desires to love. God's Spirit is pulling you and inviting you to become more of that person. The Spirit never guilts you, shames you, or bullies you to become loving. He compels you. Let's pray. Heavenly Father, thank you for teaching us the greatest commandment, to love with all of our heart, soul, and mind. Help us to walk in that love daily, putting you first in everything we do. Teach us also to love our neighbors as ourselves, reflecting your grace and compassion to everyone around us. May our lives be marked by love that honors you. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen and happy Friday. Everybody's been working for the weekend, and by golly, here it is. Let me give you the numbers from around the world. We'll start, of course, here in the U.S. with the cash markets or the indices. Currently, the Dow's down 108 points. The Nasdaq's down 23. The S&P 500 is down 21. And the Russell 2000, or man in the street, is down 13. No movers, no shakers. In the commodity basket, crude oil up 17 cents, trading 68.24 last. Gold down $23, trading 3,021 last. Silver down 46 cents, trading 33.52 last. That's a drop of almost 1.5%, or almost $2,500 per contract traded. In the Asian markets at the close, the Nikkei dropped 74 points, the Shanghai fell 44, the Hang Seng down 530 points. Now the Shanghai, that drop of 44 points, that's well over 1.25%. And the 530 point drop on the Hang Seng, that's well over 2%. And in the European markets at the close, FTSE down 48, the DAX down 106, the CAC down 48. So that gave us a red day in Asia. It was a red day for the UK. And so far, it is a red Radio Friday here in the US of A. Now, we're not deeply in the red, so the potential for this market to turn itself around going into the close is certainly a possibility. You have to always embrace all possibilities. In the news, CEO Elon Musk held an impromptu company all-hands Thursday night, giving an update on the progress of a number of products, while also attempting to assuage fears that the CEO is ignoring his post. Tesla stock has been in free fall since the start of the year, with sales slipping in key regions like Europe and China and even in the US. Though the changeover to the new Model Y SUV has been seen as a drag on sales, Musk's closeness to President Trump and embrace of conservative politicians in Europe has seen Musk and Tesla's brand suffer. Protests both in the US and abroad at Tesla showrooms are growing, as are acts of vandalism on Tesla EVs. Political terrorism. After delivering some opening remarks and a few quick questions on Tesla's milestones, such as 7 million EVs produced and the new Model Y status, Musk addressed the elephant in the room: blowback to the Tesla brand from Musk's foray into politics and leadership of President Trump's Department of Government Efficiency. If you read the news, it feels like Armageddon. I can't walk past the TV without seeing a Tesla on fire, Musk said. Of course, he's referencing these paid actors, these paid protesters, setting Tesla vehicles on fire at dealerships and vandalism at supercharger locations. He said, "I understand if you don't want to buy our product, but you don't have to burn it down. That's a bit unreasonable." Musk and Attorney General Pam Bondi have labeled the attacks as domestic violence, with Bondi claiming swift retribution is coming for the perpetrators. There's cameras all over those Teslas. There's people out there walking around thinking they got away with it. I think they're in for a surprise. Overall, Musk maintained that the news was good for Tesla and urged employees and others to hold on to their Tesla stock because in his eyes the future is bright. And you can use the foolishness of the few to buy Tesla at a 50% discount. In fact, Tesla stock is at a free fall and its sales are plunging. Even its most avid Wall Street bulls are turning cautious, but one group is buying the electric vehicle maker shares like never before: fans of Elon Musk. The company has always had a strong fan base among individual investors who hang on Musk's every word on X, the social media platform that he now owns. They analyze Tesla in great detail in online forums and largely function as a hype crew for the stock. But their current level of enthusiasm is staggeringly high. Even by recent historical standards, individual investors have been net buyers of Tesla shares for 13 straight sessions through yesterday, pumping $8 billion into the stock. Retail trading data from JP Morgan Chase's global equity derivative strategist, Emma Wu, shows that's the biggest inflow over any buying streak since 2015, which is as far back as the data goes. What makes the buying notable is Tesla's share price has sunk 17% over this time, wiping out more than $155 billion from its market value. And the left are just laughing in the streets. And you have probably heard London's Heathrow Airport suffered its worst disruption in at least 2 decades after a nearby fire cut power to the hub and brought travel to a standstill for hundreds of thousands of passengers. The busiest airport in Europe and the fourth most active in the world will be closed all day today, and service interruptions are likely to continue for days, according to authorities. The UK Metropolitan Police said its counter-terrorism command is now leading the probe, given the location of the substation that caught fire and the impact this incident has had on critical national infrastructure. Heathrow said in a statement, passengers should not travel to the airport under any circumstances. The airport said it does not know when power will be reliably restored. So far, the closure has forced more than 1,300 flights to be canceled or rerouted today alone. And last, the United Arab Emirates has committed to a 10-year, $1.4 trillion investment framework in the United States after top UAE officials met President Donald Trump this week. The new framework will substantially increase the UAE's existing investments in the U.S. economy, in AI infrastructure, semiconductors, energy, and American manufacturing, according to Reuters. The officials said the agreement resulted from a meeting that Trump held on Tuesday with UAE National Security Advisor Sheikh Tahnoon bin Zayed in the Oval Office, and a dinner that Vice President J.D. Vance and several cabinet members held with the UAE delegation, which included the heads of major UAE sovereign wealth funds and corporations. Under terms of the framework, UAE Investment Fund, ADQ, along with U.S. partner Energy Capital Partners, announced a $25 billion U.S.-focused initiative to invest in energy infrastructure and data centers. So there you have it on this Red Friday. Logic 247, our 24/7 around-the-clock E-mini alert service. It's not just E-minis, also crude, gold, silver. We're currently in week 346. Over the last 346 weeks, we have issued over 19,200 individual handcrafted alerts. Valerie did the recap this morning at 6:30 a.m. Eastern. She will, of course, finalize it for the week this afternoon or this evening. Since the markets opened Sunday night at 6 p.m. Eastern, we issued a total of 44 alerts. At the time Valerie did the recap, we were still waiting on the outcome of 11. That gives us 33 actionable alerts, of which 6 or 18% would have been stopped out based on market structure and a simple process we teach all of our passport holders in their one-on-one mentoring sessions. Now, every logic alert has an entry price, an initial target designed to help you get your goal for the day, additional targets, and a final trade to target. Yes, you can trade them, but the real purpose behind the logic alerts is to help you learn how to read a chart. You want to be able to look at any chart of any market, any time frame, and with the help of our humble indicators, instinctively know what the next high probability move is. You want to be able to look at the chart and spot where the next potential resistance is, the next potential support. And in doing so, you unveil the windows of opportunity that exist between those 2 points. The idea is to get you to the point where you see the market the same way we see the market. You read the chart the way we read the chart, and then pretty soon you don't even need the alerts. You just look for the windows of opportunity and trade them. Now, the logic alerts can come out anytime around the clock. Futures trade around the clock. We have traders around the globe. Our day session is our night session, and vice versa. Now, 346 weeks, that's a pretty long time. But way before we had Logic 247, we had our concierge trade alerts, and they're different. One big difference is they don't come out around the clock. They're posted as a static report, 5 minutes ahead of the open, every day possible. And I put a note in the discussion group that says CTA scheduled for 5:55 p.m. Eastern. Sundays are the one day that it's practically impossible for me to get them out ahead of time because I'm doing a lot of other things. But I strive each day to get them out at 5:55. Thursday we did it, Wednesday, Tuesday, and Monday. Sunday night, they came out almost an hour after the market opened because I was doing the weekly trading zones and all the other stuff. So what that means is all of our members and all of our trial members had all of these targets 5 minutes before the market opened last night. The S&P, the Dow, the Russell, crude oil, the NQ, gold, and silver. So let's go take a look at the chart and see where we're at. Go to the daily chart of the S&P as we do each and every day. Now, last night in the workshop, I talked about the fact that price has been consolidating for 1, 2, 3, 4 days at the 24% reverse fib. I say reverse fib because we're now in a downtrend, whereas we've been in an uptrend for a very long time. In an uptrend, you draw your fibs from the low to the high, and a downtrend from the high to the low. So after we put in this low, March 13th, we bounced, the step line crossed red and falling, and we've been straddling that 24% fib for 1, 2, 3, 4 days. And the step line, because it's directly below price, has served as support, 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 support. Now today it's been behaving as kind of resistance. We're right up against the 24. Now we're well off the low of the day. So is it possible that price could overcome the step line, overcome the 24, and make a run? Yes. Now the thing you want to really notice is that red and falling has turned to blue and climbing. Last night in the discussion group, in the workshop, I talked about the potential for today to be an up day because up here, the 38% fib retracement and the daily BBC, they're like magnets. Okay, price is really trying to get there, but before it can do that, now it's got to overcome the 24, and it's got to take out this high at 57.65 1/4, and this high at 57.70 1/2. So how we close today will be very important, as it always is. Once red and falling turns to blue and climbing, like this, it's what we typically expect. Now that blue and climbing is directly below price, that if price were to fall out of bed, you would expect support here, here, and then here at the low from March 13th. However, if buyers come in this afternoon and rally this thing, we could very well close back above the 24. So it's been an unusual few weeks for a lot of reasons, but this is where we stand. I encourage you to look at the daily chart of whatever you trade for 2 minutes before you start trading. Institutional traders, the ones who literally move price because of the size they trade in based on the size of their accounts. They look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Has everything to do with account size. So, whether it's futures, stocks, crypto, Forex, ETFs, by spending 2 minutes with the daily chart before you start trading, you get an idea of what the deep pockets are doing or not doing. Okay. Now we got a red candle, but remember it was red all the way down to here during this session. So that means there's been a whole lot of buying going on. Question is, will they keep the pedal to the metal and push us over this obstacle, which would then chart a course to this obstacle or target, however you want to label it. Now, all alerts are created on the 30-minute chart. The vertical line here separates today, Friday, Thursday, Wednesday. If I scroll back, we'd see Tuesday and Monday. When price rallies up to a weekly zone, we expect resistance until proven otherwise. When price drops to a weekly zone, we expect support. Until proven otherwise. So, open last night, and remember these targets were published 5 minutes ahead of the open. We opened right below the weekly zone, resistance, which sent us down to blue and climbing, support, which sent us back to the zone, resistance. We consolidated for a few hours. When price encounters a weekly trading zone, one of three things happens. 70% of the time, consolidation. 20% of the time, rejection. And 10% of the time, the slice. So as price got below the BBC, blue and climbing turned to red and falling, we got a leg that took us almost to the target. What was the low of that candle? Missed it by 2 ticks. No more than that. 3 points. The low was 99.5, so 3.5 points. Okay. But this is where the buyers came in. If you look left, you'll see the potential for support there. I was keying off this right here for the short target. So we pull back to the BBC. The green line is called the BBC. It stands for Bull Bear Cross. When price crosses above the green line, we're bullish, expecting higher prices. When price crosses below the green line, we're bearish, expecting lower prices, higher prices. Now the pullback to the BBC holds more often than it doesn't, but eventually it will trade through. As you can see, this pullback held, this pullback held, this pullback held, this pullback held. And as we dropped to the zone at 5660/61, what do we expect? Support till proven otherwise. Support sends the market looking for resistance. Pullback held. That sent us back down to the zone again. And then this candle, it opened red, tapped the zone one more time, and that was at 12 noon. We're now on the 1 o'clock candle right here. Red and falling turns to blue and climbing. Now, after the pullback held on all these moves, this move sent us to the target, the bottom side of the short target. We already hit the short target way back here. Now, the market found support right on top of that short target. And so our next obstacle on the way up, we're at it right here, this high. The next obstacle will be this high. And then you're at the zone, 57.20.21. So as you can see, the market is attempting to rally into the afternoon session. We've got blue and climbing down here to support the move. So it's very possible the market could close at the zone here, 57.20/21. On the Dow, here's where we opened last night, right at the zone. When red and falling gets directly below price, it becomes support because it's often on its way to turning into blue and climbing. And it sent us up to the zone, and we consolidated for hours. Remember, these are 30-minute candles. So after hours of consolidation, we dropped below the BBC. Blue and climbing turned to red and falling. Down we go. We didn't quite make it all the way to the short target, but certainly enough to get your goal for the day a couple times. Buyers came in a little earlier than expected, ran it up to the BBC, the pullback held, and then we got another leg that took us right to the target, pretty much to the tick. We overshot it by a couple points. And then we made a run up to the BBC, which sent us back down into this area here. See the bottom of these four candles, the body, that's right in this area here. So support will always send us looking for resistance. Now it found it at the underside of the short target for a bit. And then the pullback to the BBC held, sent us way down here. Let's see, Friday, Thursday, Wednesday, Tuesday. That might be the low of the week, is it? Go back one more day. Friday, Thursday, Wednesday, Tuesday, Monday. I guess I could just scrunch it up a little more. So this low there, and buyers came in big time, and we had no high impact news today, so we really weren't expecting a whole lot of movement today. That's what we talked about in the workshop last night. So buyers came in, we hit the BBC, and once again the pullback held. That sent us back down to red and falling in the step line, and when they get directly below price, again they become support, potential support. And then just as we turned from red and falling to blue and climbing, we ripped. Now remember, the pullback holds more often than not, but eventually it will trade through. So this high is basically this high, and right behind that you can see there's a bearish cross. That's where the red line gets below the green line. So that has been an area of resistance now for the entire session. We're printing a red candle, but price rarely travels in a straight line. Leg, retracement, leg, retracement, leg, retracement, leg, and this is where we shifted directions and started heading in the other way. Now you see the red disappearing. So it looks like we're headed for this zone overhead. And again, 70% of the time when you hit a zone, you're going to get consolidation. So we'll see if that happens. On the Russell, we opened at the weekly trading zone, bounced up to the BBC, the pullback held. That sent us down all the way to the target. Got a little bounce and continued all the way down to the zone. From the zone, we bounced up to the underside of that target right there. Resistance. That sent us down to blue and climbing. We had a little support here, another pullback that held. And then we closed below the zone. Attempted to get to this zone. Didn't quite make it. Friday, Thursday, Wednesday, Tuesday, Monday. So this low came in a little bit of an unexpected area. Remember, 20% of the time the market does not do the next high probability thing. Keeps you on your toes. So we've overcome the BBC. We've got blue and climbing below us. So we've got a double top right here. So we need to overcome that short target. And then we've got a potential obstacle here, here, and then it's clear sailing up to here, and then you're at the zone. Crude oil. This is where we opened, and we made a run right to the long target. Consolidated there for a few hours, dropped to the BBC. Now red and falling, when you got that much red and falling, that's when you think maybe this time the pullback doesn't hold. And this time it didn't hold. Price got below the BBC. It did reach up like it was trying to turn itself around, but that didn't happen. The market again found support at the low here is 67.65. The weekly zone is 67.60/67.65. That's the low right there. So hit the zone to the tick. Now the zones are published Monday morning since December 14th of 2009. A little over 15 years. They're published Monday morning at 6:15 a.m. Eastern. And once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. So from the support at the zone, 67.60/65, that sent us above the BBC. And then back to the BBC, back to blue and climbing. And now we're attempting to take out this high right here, and then here, then here, and that puts you at the long target. Now, I'd be cautious in this area because it takes 10 ticks to get your goal for the day. And you really need to overcome this obstacle, this obstacle. There really just isn't room. Now, if we were to take out the high of the session, and we could because we got blue and climbing here, then 68.70 all the way up to 68.95. That's a possibility. We're currently printing a red candle. We just had a bullish cross. That's where the blue line gets above the green line. So we've got support times 2 right here if this candle keeps dropping. Gold, here's where we opened. Blue and climbing was directly above price. And when that happens, it's potential resistance because it's probably on its way to becoming red and falling. And when blue and climbing becomes red and falling, this is what we often get. And so we got it right down to the target, to the tick. Oh, actually we overshot it by a couple ticks. Consolidated a bit and then dropped all the way down to this area. Now you see right there where the step line, it had crossed, but then it crossed back. That makes that an important price, important area. And that's where this low is. Okay, so support sent us up to the BBC, pullback held. Brings us up to resistance. The pullback held would send us back to support, back to resistance, back to support. And remember, when we trade through a short target and come back at it, quite often that will become resistance, and it did for 1, 2, 3, 4 30-minute candles. And the bottom kind of fell out. Took us all the way down to the weekly zone at 3007/3008. Support always sends the market looking for resistance, which it found at the step line. So we had a leg, a retracement, and now we're trying to get back to the zone. And then if we can overcome the zone, there's resistance there, potential, and here. If we overcome the BBC and gold starts to move higher, okay, keep in mind you've got this bearish cross right here, which is potential resistance. Let's call it 30.35. Which means if you got in at 30.33 up to 30.35, that'd be $200 per contract traded. Silver opened right at the weekly zone. Blue and climbing overhead, turning to red and falling, gets us below the BBC, takes us to the target, pretty much to the tick. You get a little bounce, and then it's down to the zone where we consolidate. Then we get a leg and a retracement. Then we get a leg and a retracement. Then we get a leg. We get this big doji. The step line is crossed red and falling, so we would anticipate a retracement to the BBC. And if the pullback holds, we get another leg to the downside. If price overcomes the BBC, then it only takes 2 pennies to get your goal for the day on silver. So 33.70 up to 33.74. That'd be 4 pennies. That'd be $200 per contract traded. And here we sit. Which way will it go? Only time will tell. But this is the first encouraging sign, truly, that we've had since the downtrend began that we could see a potential reversal. And if we were to overcome all these fibs, up here is the bearish cross. That should be like an iron wall or a brick wall. But really, we're still just all week consolidating sideways. We've been a little above the 24, below the 24, above and below, and above and below, and above and below. And this session, just mostly below. We'll see what happens as we move into the close. To become a member, send an email to support@cfrn.net. In the subject line, put "I want to become a member." In the body of the email, just put your name and phone number. We're not going to call you, but we are going to email you an information kit that explains everything it means to become a passport holder. Number one, you're going to get 2 hours of live interactive training every trading day. Live trades and live markets. You're trading along in your demo account to qualify to go live and asking every question that pops into your head. That's the best way to learn. Okay? You can read books, you can watch videos, but how many times have you watched some video and the person did something that you didn't quite understand, and golly gee, you wish you could ask them what they did or why they did it, but that person, well, they're not there. So that's the power of an interactive training environment where you're able to ask questions as they pop into your head and get an answer. 9 out of 10 new traders fail because they don't have a teacher. So we've plugged that hole for 2 hours a day since 2008. Along with the 2 hours of interactive training every trading day, you also get private one-on-one mentoring. The strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETFs, doesn't matter because price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. It's been that way since the inception of the markets, and it will remain that way until the markets cease to exist. Why? Because that's how markets work. As a passport holder, you'll get the Logic 247 alerts around the clock. You get the concierge trade alerts the second they're posted every evening. Monday morning, 6:15 a.m. Eastern, you get the weekly trading zones. Again, once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. As a passport holder, you'll always get an invitation each Thursday to join us for the members only workshop. And you get the golden key that opens all the channels in Telegram. We have public channels, private channels, but once you become a passport holder, you have access to everything. Just send your email to support@cfrn.net. Okay, let's wrap this week up with our good word for the day. Now, for the last 2 days, we've talked about being armed for spiritual warfare. This is part 3. Pray in the Spirit at all times and on every occasion. Ephesians 6:18. Your spiritual armor must be put on correctly so that all the pieces fit. Otherwise, you're vulnerable to defeat at Satan's hands. So, how do you do that? Paul tells us, pray in the Spirit at all times. Your clothes closet is where you find what you need to wear in the natural realm. And your prayer closet is where you find what you need to wear in the spiritual realm. Only through prayer do you become clothed for spiritual warfare. So don't go into battle undressed. Paul writes in Romans 13:14, but put on the Lord Jesus Christ and make no provision for the flesh to gratify its desires. That's one of the most effective verses in Scripture when it comes to winning over temptation. Professionals who train dogs to listen and obey their commands, no matter what, start by throwing a piece of red meat in front of the dog. The untrained dog immediately goes for it, but eventually the trainer teaches the animal to give him its undivided attention regardless of what's put in front of it. When the training process is complete, the dog will not take its eyes off its master, even when the temptation is right under its nose. There is an important lesson here for you. If you keep your eyes on Jesus, it won't matter what kind of lie or temptation Satan throws your way. Every now and then you may want to go for it, but if you stay focused on Jesus and listen to his voice alone, you will be victorious in the fight. And that's our good word for today and for the week. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.